I have personally made over 6 figures using this exact strategy I'm about to show you. This isn't some retail strategy trading MACD, breakouts, moving averages, but with this strategy, you're going to specifically be trading with banks and entering where banks are going to get in for the largest moves. This is a foolproof, data back-tested strategy used by thousands of traders making thousands of dollars, which has allowed me to hit over 5 figures in payouts every single month consistently. So this is a 3-step strategy. Do not lack off and pay attention to every single step. So this is the IPD FEG model strategy. As you can see, it is a 3-step foolproof strategy that I've used to hit multiple 10 or 6-figure payouts. Step 1 is going to be super straightforward. It is going to be the higher time frame bias that you are going to use in order to get your lower time frame entry. So, step 1, high time frame bias. This is going to be starting off on your higher time frames, your weekly, daily, 4-hour, and 15-minute time frames. On the higher time frames, you want to be thinking about, are we going from external range liquidity or internal range liquidity? So are we going from external to internal or internal to external or internal to internal? You never go external to external. So the way that you're going to think about this is, are we going away from or to a PD array or away from or to liquidity? In these two examples right here, you can see in this uptrend, we have already taken out our external range liquidity. We have our new buy side liquidity. What do we know about how the market moves? It goes from external to internal. So instead of targeting liquidity after taking out an external range liquidity, you are going to target an internal range liquidity, which is going to be a PD array. So in this case, your higher time frame bias is going to be bearish, targeting this internal range liquidity fair value gap. Now on the opposite side, if this move has already happened to the downside into the internal range liquidity, then you're going to look for an external range liquidity swing to liquidity, right? So come down into the fair value gap, then you're looking for longs to buy side liquidity. The other thing you want to look for when you're using your higher time frame bias, and this is going to be kind of coming down in the smaller time frames, this is going to be your 1 hour, 15-minute, 5 minutes, and these time frames you want to be looking for discount and premium. So the only thing that you're going to pick up right now from discount and premium is that you are going to short when you're in a premium. What does that mean? You have created this range from this low to this high. And if you're bullish, then you are not going to enter inside of this green box. How do you know? You're going to grab your Fibonacci, place it at the low, place it at the high. You're going to get consequent encroachment, which is going to be 0.5. If you are bullish, you are only going to enter the market once market has came into a discount, which is down below this red box or below consequent encroachment. Then you are able to enter longs to the upside. So when you're shorting in a premium, as you can see in this example right here, you're going to grab your Fibonacci, place it at the low and the high, and you're going to get your premium and discount levels. Remember, premium is always above, discount is always below. Whenever you are a bearish bias, you want price to be inside of a premium. You enter inside of the premium targeting a discount. So short inside of a premium in the green box, and then you want to look for longs inside of a discount, which is the red box. And the last step of step 1 is going to be looking at your session profiles. This is going to be Asia session and London session. Asia session is always going to be in the blue, and London is always going to be in the red. So as you can see, this is Asia high, Asia low, London high, London low. Whenever Asia accumulates and London takes out a side of Asia during the New York AM, you're always going to want to look at opposite side and targeting Asia highs. If you want to look more and get more in depth about the session Just look up ICT session profiles and it will go in depth about all the different types of sessions. So going on to step number 2. Now we have our high time frame bias and we know what we are looking for the day. Now, let's say on our high time frame bias, we have made a bullish bias for the day. Step 2 is going to be determining your accumulation, manipulation, distribution, and power of 3, which is all the same thing. First of all, you need to understand exactly what power of 3 is. So power of 3 is going to be fractal times and what happens in every single candle. Let's say this is a 4-hour candle that I'm drawing out right now. Each candle has 4 phases. It has the open. It's going to wick down on a bullish candle. So it makes a bottom wick. It's going to come up, make the high, and then it is going to come down and close. What does this look like? This is what it will look like. Right here, it'll accumulate, come down, creating this wick. Then it's going to come up, creating the body and the top wick, and then it's going to come and close down. This is what happens on every single candle. So this is a 4-hour candle. Why are we using the 4-hour candle? And you will see how this aligns with time. Why? Because time over price. And what does that mean? If your setup forms not within the right time, so too late in the day or too early in the day, then you won't take it because timing is more important than what price is showing you. Why is this important? Because the time that I'm showing you to trade this model is going to be the highest probability time of the day. Now, why is that? 3 reasons. It's going to be because this 4-hour candle is going to be the candle that opens up at 10 a.m. Why is this important? Because this is the overlap of the New York session and the London session, which means the highest volatility. And then also you're going to be trading within the 9:50 to 10:10 macro time, which is the highest probability macro time. Why? Because it's in between those 2 sessions. It's the only time those 2 sessions overlap. And also it is the last 10 minutes and the first 10 minutes of the hour. So once you understand that every single candle moves exactly like this, the power of 3, right? Open, low, high, close. You have to understand that that happens every single candle. So even if we go and look at a 1-minute candle, you have to drop down into the 15-minute time frame to actually see what is happening on the lower time frames to see where that 1-minute candle is going. Same for this. In order to catch the most moves and the highest points and the most money per trade, trading the whole entire 4-hour candle of 10 a.m. So 10 a.m. to 12 to 2 to catch the whole entire move of the 4-hour candle. You need to drop down in the lower time frames to see exactly what's going on, just like this. So step 1 of these candles are going to be accumulation. Accumulation, consolidation, same exact thing. This is going to be when price is staying within a range, creating buy side liquidity and sell side liquidity. Step 2, and you'll see how step 2 aligns with the entry model, is going to be manipulation. Manipulation is going to be where this allows 2 things. It gets traders that are trading the breakout, it takes them out of the market, right? How do you get inside the market? The only way you can get inside of the market is taking somebody else out the market. How do banks get inside of the market? They need a bunch of traders to get out of the market so they can fill their $1 million positions. And this is why we are using this model and the AMD. So manipulation, it's going to take out a side of liquidity of this accumulation move. It's going to come out, take out liquidity, preferably 15-minute or 4-hour liquidity, also coming down into a 15-minute fair value gap. Then step 3 of the AMD is going to be the distribution, which is going to be the real move where the banks get in. So as you can see, price accumulates, manipulates down, faking traders, taking other traders out the market so we can get in, down into a 15-minute fair value gap. Then we're looking for an entry model, which I'm going to teach you. And then from there, you catch the real move of that 4-hour candle in the highest probability time of the day. So now that we have the basics out of the way, we are going to actually go over the exact entry model so you can get inside with the banks and make the most amount of money. This is going to be my IPD FEG entry model, one of the most powerful entry models out there. So this is the basics of the model is going to be 3 steps, and you can see exactly how it aligns with the power of 3 to catch the most amount of points every single day. So step 1 is going to be waiting for a Judas swing / liquidity sweep. It means the same thing. What is the Judas swing and how do we align it with time over price? The Judas swing is going to be from 9:30, so market open, to 10 a.m. Now, what is the Judas swing doing? What the Judas swing means it means that it's a fake out move. So as you can see, this red line right here is market open. It's the same thing as a manipulation leg. Just we align it with time and market open. It's going to come down, Judas swing happens, taking out traders and taking out all of these retail traders that are trading this breakout. What do we want this Judas swing to come down into? Yes, we want it to come down into a 15-minute fair value gap. Doesn't have to be 15-minute. It can be a 15-minute or a 1 hour or a 4-hour fair value gap. But 15-minute fair value gap is going to be the strongest, so it can align with the 4-hour power of 3. Step number 2. This is when we actually look to enter the market. Now, super important rule, time over price. The only time that you will be entering is going to be between 9:50 and 10:10. Literally the only time that you are going to be looking for the market structure shift and the fair value gap is going to be between 9:50 and 10:10. That's the only time you're allowed to press buy or sell. And what are you going to be looking for? A market structure shift. What is a market structure shift? It's going to be a close above a move that came down, taking out liquidity. So it just basically means a candle closure above a high. Important rule about this. Let's say this is the high that we are looking to be taken, right? Bam. This is the high. Come down. Just like this. Important rule with the market structure shift, there's 2. First of all, the body has to close above this high in order to be a valid market structure shift. So as you can see, this body is above this high. That is how you know it's a valid market structure shift. If it's down like this and it wicks above, then it's not valid. You have to wait for a candle closure above this high. Step number 2 and rule number 2 is that this market structure shift has to be on both ES and NQ at the same exact time for the highest probability entries, which those are the only entries you want. You want the highest probability entries. And again, this is going to be between the 9:50 and 10:10 macro time. I will always say that. Most important time to trade. Now, the last step of this entry model is going to be a fair value gap, right? Fair value gap is going to be the gap in between the 3 candles. Pretty straightforward. Bam. Fair value gap is going to be this. Okay. So now you know what a fair value gap is. Now, how are you going to use it? The only way you're going to enter with this model, and what this model is when this fair value gap is going through the high of the market structure shift. Okay. Now I'm going to use this as an example right here. This fair value gap has to be coming through this high. As you can see, this is the high. The body of the fair value gap is going through the high. That is the only way you're going to enter, is if the fair value gap is going through the high and it is on ES and NQ at the same exact time. That's why it's important to have both charts open at the same time. So now, little recap. You're going to have your Judah swing. Market's going to accumulate. You're going to have your Judah swing taking out retail traders and taking out sell side liquidity, having our liquidity sweep down into a 15-minute fair value gap. Then during macro time, 9:50 to 10:10 macro time, you're going to wait a market structure shift with a candle closure above the high with a fair value gap going through the market structure shift high on ES and NQ for your highest probability trade entry. And this is exactly how you are going to use the IPD FEG entry model. So going straight into actual executions and how you are going to use it. First and foremost, go ahead and use this power of 3 indicator right here. It is by 2 degrees. It shows you where the candle has opened, where it has wicked down, where it has come up, and where it is possibly going to close. This is going to be super helpful to identifying that power of 3, especially when market opens. So getting straight into finding setups. We aren't going to worry about too much about time and price right now and how to use it on the higher time frame, because right now I just want to show you how to spot the actual entry model. So this is one right here. What do we see? Let's do this. So we have our sell side liquidity taken, coming down into a 15-minute fair value gap. We have our fair value gap coming through this high, making a market structure shift. You enter long, stops at the bottom. As you can see, you come back down into the fair value gap now, targeting previous day high right here, and a 3.41 risk to reward, and an entry right there with little to no drawdown. So this is exactly how you are going to trade the IPD FEG model, and making sure that you align it with the high time frame bias. You have to make sure the high time frame bias aligns, making sure it aligns with the AMD power of 3, and also step 3, making sure you have your entry model as the IPD FEG entry model. So now that you are done watching this video, I have a couple more YouTube videos for you to watch. You need to watch this separate video on the power of 3 and how to actually use this indicator and align it with the entry model perfectly. I go over all of that right here. And if you are interested in one-on-one mentorship with me, where I guarantee you 6 figures in funding and profitability, and if you don't, I personally work with you until you are profitable and send you back $1,000, go ahead and click the link in the bio to see if you qualify.